make sure for me that the YouTube is running properly. I would appreciate it. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA/SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Thank you, Robert. Position disclosure updated. Again, I haven't done an afternoon meeting in a couple of weeks. There's a lot of changes in this position disclosure. A lot of stuff I've been doing has been a little bit more in and out recently. Shorter term swings that have been actively trading around. Been a lot of flips between long and short, especially on the index level, and for the most part, it's been working really well. So yeah, that's the updated position disclosure. I think I'm in like 23 swings or something like that right now. None of them are huge though. I don't have anything on that's like really big, but just a bunch of positions that I'm managing. All right. So let's do the recap. SPYs here are up 0.6%. The Qs are up 0.75%. The IWM with the relative strength is up 1.5%. TLT finished higher, but it's still range bound. The dollar went green to red, just actually seeing that for the first time. So it's a little bit notable, especially because we're so focused on commodities right now, and the dollar has a pretty big impact on commodities. Oil, USO here finished up 2% with all of our Venezuela drama. Not that crazy of a move, all things considered. Still range bound on the daily chart, but there's some resistance at this like 70, 71 in USO on the upside. Gold finished up 2.6%, helping to get a little bit of a bid with just some global tensions. Silver's up 5.5%. Platinum's up about 6%. And then crypto, Bitcoin in particular, had a pretty strong day today. So great follow through from the call out on Friday on the long in this stuff. Bitcoin up 5%, but interestingly, Ethereum a little bit weaker, though Ethereum traded pretty well during the day, up almost 4%. Solana up 5%. So not bad. Turning things over to the charts, starting at the index level. So at the index level, especially with the SPYs and the Qs, it was kind of boring. It was a gap up, and we spent most of the day digesting the gap. Especially with the Qs, a little bit of relative weakness there. The IWM was a little bit more exciting because it did trend throughout the day. It trended higher. But let's see what this is doing to our daily chart to try to get a little bit of a bigger picture view on how this market is beginning to set up. So a little bit of an upside tail here I'm seeing on the SPY daily candle, but we closed above 687. And 687 was the level that I've been looking at because it would negate the sell-off that really started on Wednesday during our holiday week. It's been primarily led by the NASDAQ, by Mag 7 stocks on the last day of 2025 and the first day of 2026. But we were able to recapture 687. So this like penalty box candle, so I like to call it. It doesn't mean that we're going from bullish to bearish. It just means, hey, we're bullish, but this is something that you should take notice of. It could lead to something else. Has now been negated. Therefore, the S&P is back into full-on bullish technicals here, and it's telling you that you are better off being long than short this market, at least for the time being. The NASDAQ with its relative weakness still isn't there, though. The Qs, have honestly been relatively weak for probably a few months now. And whereas the SPY obviously was able to pretty much make its way back to all-time highs in December, the Qs here are still pretty far away from that. And again, that's just broader picture weakness from Mag 7. And whereas the SPYs recaptured 687 to get back into full-on bullishness, and the IWM, which we can look at in a second, is back above 250, confirming kind of full-on bullishness. The Qs aren't really fully there yet. They need to get above 620 to kind of confirm the bullishness of that chart. So I would say for the moment, we've got 2 of the 3 indexes that we're looking at regularly as giving us a pretty bullish signal, and one, which is the NASDAQ, which you could argue is the most important one just because it contains those Mag 7 stocks, is a little bit more neutral right now unless and until it can get above 620. That's the index level update. What we were looking for from today's trading session, based on the game plan we discussed in the morning meeting, was kind of a continuation of the price action that we saw on Friday. So Friday was really the first day that we began to see this degree of some sort of a January effect. You can really see that when you compare the chart of the Qs versus the IWM. You can really see that when you compare a chart of like SMR or some of these meme type stocks and what they've done Friday through today versus most of the Mag 7 stocks, which some of them gave healthy bounce backs, some of them didn't. Like Amazon, I know looks a lot better after today. Microsoft couldn't really pick its head up. But you can definitely tell just overall big picture. If you're typing up a lot of these, I call them crappier companies because they honestly are. If you type up a lot of these crappier companies, these meme stocks, these pre-revenue companies, they've given really big 2-day bounces. And again, a lot of that is just the January effect. People who are up a lot of money in these Mag 7 companies, they didn't want to sell in December and realize the tax implications of the profit taking. And the flip side, if you were long SMR from almost anywhere in the entirety of this bubble-ish type move that the thing had from May through November, you are, able to get some tax loss harvesting here if you're selling your SMR at a loss in December to offset some of the gains that maybe you've had in other places. So I was actually looking for this move to begin. They usually kind of front run the January effect. So usually in like the last week of December, that's really where a lot of the Santa Claus rally concept actually comes from. That's when you'll begin to see these more beaten up stocks catch a bid. So I started looking last week, and I guess it was a little bit early for these types of names, the crypto names, the nuclear names, the quantum names, the rare earth names. Take your pick. The flying car names to start to rally, but they didn't really pick their head up until yesterday. I do think that eventually these moves are going to be capped. I would be pretty surprised if we saw SMR just be back to $50 plus by the end of January, or if we saw like QBTS. QBTS is actually a little bit closer, but RGTI like back above 50 by the end of the month. I'd be pretty surprised. But I do think that there could be a little bit more legs behind this move than what we are just seeing here from the first 2 days. With that said, you really want to keep an eye on what the more important companies are doing, because eventually this opening rotation that we're kind of seeing and this dispersion that we're seeing here in the beginning of the year, where Microsoft's not trading well, but SMR and RGTI are trading great, that won't last forever. And at a certain point, if Mag 7 continues to be really weak, it could damage the NASDAQ, it could damage the S&P, and that'll almost definitely follow through into these types of companies that are basically pre-revenue stocks at this point. But if you stuck with that thought process, there was some good money to be made. I know, like I mentioned this Oscar, I didn't get involved in it, but this is like a perfect example of one that I really liked, because you're able to combine the beginnings of that January effect on Friday, which I thought was going to get followed through today, plus an upgrade this morning. So that ended up being really solid. I know CNC, which we talked about in the morning meeting, also gave pretty good follow through. Oracle, on the other hand, which we were looking at to see if it could break 200, really disappointing. I thought with the Jeffries defense that this thing could break through 200, and I'm big picture bearish still on Oracle, but small picture, I thought maybe you could see a gap fill up to the 210 to 220 area. And after today's candle, Oracle looks pretty bad. From some other trading, one of my biggest focuses off the open was this kind of opening SOXL short. They ripped this thing really hard, really fast. And I know sometimes I struggle to communicate a little bit in the first 5 minutes because I have so many positions going off at once, but I know for sure that I called out the short back through 51 in SOXL right at the beginning of the day. So that worked out pretty good as a pullback into the 80 MA here. There was a nice flush down to 49.17. I had a really big bid at 49.09, which I didn't get filled on, which is unfortunate by a few pennies considering how much it came down. But I had a few other larger bids below 49.50 that got filled. So no complaints there. And then it never actually made a new high. It turned around pretty strong, but never cleared that opening high, and then was a little bit weaker into the close. We've got NVIDIA speaking at the CES conference after hours today, so that could definitely move some of the semiconductors and could move some of the semiconductor ETFs as well, obviously. Looking at Mag 7s, now I pulled up NVIDIA. Your NVIDIA is still intact on this daily chart. It's definitely disappointing if you're trying to be a bull on NVIDIA that it didn't perform better when it started to break above, what day of the week is it? Today's Monday, right? Above Friday's high and and above 190. So a little bit disappointing, but overall the chart is still intact until as long as it holds like 186. You could even make an argument that the chart is still intact as long as it continues to hold 183. So not a great day from NVIDIA, but it's still intact. Apple, on the other hand, lost that support level of 270. So Apple's now become a little bit more broken. It's interesting because if you guys remember, just last week we were looking at like every one of these stocks in really tight range, and we were trying to figure out which way that they may break. And now we have a conclusion here. Apple has broken to the downside, whereas Amazon broke to the downside on Friday, but was able to fully recapture that today, and actually is looking pretty good at this point. So Amazon looking pretty good, maybe continuation through that 233 area. Google relatively weak today, which was a little bit disappointing. It just seemed really out of play. But overall, the daily chart in Google is still very much intact, whereas Microsoft is not good. Lost its support level in a big way on Friday, and then continued that relative weakness today. So Microsoft definitely looking a little bit more broken. And Tesla, I would argue, is the most broken of the Mag 7s at this point, but had the most relative strength probably out of any of them throughout today's trading session. It still has more work to do. This Tesla's got to get back above 460 in order to begin to regain some health. So I'm trying to think if there's anything else really to talk about. Silver continues to kind of be a big focus. Kind of had the push through failure here on some volume at $70, which was interesting, and it came down. I am significantly more conservative on my SLV short than the first time it was up here, back here on December 26th, and was insanely extended and going parabolic. Now, if anything, it's starting to build out a little bit of more of a bull pattern, but is also kind of sloppy in it. I would guess that silver actually needs more time to digest and was probably only as strong as it was because of the geopolitical tensions from over the weekend. Oil. We can take a quick look at here too. So again, oil, like I was saying, not much really going on, which if you read a lot of the analyst notes that we had in Pat's note and in the VTF this morning, it kind of meets expectations. But the more interesting stuff is definitely in the XLE and honestly particularly in the OIH. OIH is back above 300, which had been a really big level in the beginning of December. Obviously, it's on an event here, and a lot of those stocks are trading great. I'm a big fan of SLB, but it's so hard to chase these things into extension. So I would say for the most part with these energy names, we need a few days now to let them kind of move sideways and back and fill a little bit to satisfy the, that's a lot of upside extension for how energy stocks typically trade. These names are usually a little bit more slower moving. So it's such a large gap that it creates a lot of extension. I was definitely a little bit lucky to be swinging Chevron long into the news that occurred overnight. So I dumped a lot pre-market at like 168, 169. I rebought that stock slowly all the way back down to 160. So, everybody gets lucky sometimes. But yeah, it's all that I've got. We're back. We're back. We had no afternoon meetings going on there for a couple of weeks just with the holiday trading sessions, but we are back, and Wall Street is back, and the stock market hasn't stopped giving us some good opportunities. I thought that today was great. When things were, things are really giving a lot of that dispersion. There's a lot of opportunity on both sides of the market. I thought Friday was great too. Crazy, Friday was given the start of the year stuff combined with like no liquidity, but some really whippy movements. But I thought it created for some great price action that you could take advantage of. From Liam here on XLF. Curious on your XLF thoughts. Got away from me today. Just completely ripped it off the open. Yeah, so I'm not really sure what to attribute the XLF strength to entirely. Rock was speculating in the VTF a little bit, and he may be correct. I haven't done the research on it. That's similar to why Chevron is so bullish. Maybe that can be impacting the banks a little bit as well. So for anyone who did not listen to either the morning meeting when I mentioned it or when I was on with Greta at 12:30 today, the big thing about a lot of these oil names, like Chevron in particular, isn't just that new business might be getting opened up. It's that Venezuela owes a bunch of these companies a ton of money. I'm not sure the exact amounts, but I know it's billions of dollars. Billions of dollars is owed to Chevron by Venezuela. Billions of dollars is owed to ConocoPhillips. Billions of dollars is owed to SLB. From Venezuela, and the idea is that maybe some of these companies can actually get paid now. So Rock was speculating that maybe there's some degree of Venezuela owing some of these banks money as well, some loans that were priced in a certain way, or were maybe even getting defaulted on, and maybe that helps these XLF stocks a little bit. I don't know. What I can tell you is that the XLF daily chart had overall been very bullish, even kind of coming into today's trading session. So you've been in this uptrend. You got a little bit extended. You have like a nice, healthy 4-day pullback that overshot downside a little bit, but was still intact. When you think about pivot lows, and I go over this in one of my training program classes, when you think about equilibrium and pivot lows within an uptrend, in a really strong uptrend, you could get a pivot low that comes in at the 80 EMA or even a little bit above the 80 EMA. A lot of times we see those pivots happen in between the 8 and 21 EMA at the midpoint of the 8 and 21 EMA, which is about a 13. Sometimes you see it trigger off the 21 even on a deeper pullback. Sometimes in the deepest but still healthy pullbacks within an uptrend, you can even see the 21 EMA get pierced exactly like this, create a pivot low, and then continue higher. So the XLF daily chart looks great, and not even knowing, and I still don't know anything about that speculation we're having about the banks with Venezuela. In the pre-market when we were doing the morning meeting, we talked about the XLF, and we talked about in particular looking for Citi or Goldman Sachs off the relative strength. And I think Goldman got an upgrade. I don't like to trade Goldman because it's a $900 stock and the spread is really, really wide, so I'm probably not going to be involved in that. But this is the best one to go after, just technically speaking, when you combine the relative strength, the technical pivot low, and I think it was an upgrade or a price target increase from some analyst that happened this morning that puts it further in play. So Goldman we mentioned and Citi we mentioned, they were both great if you're able to capture it in some ways. From Liam, look good for today, just tough to catch unless you came in long and you were trading on the daily chart. Yeah. I mean, you gotta, I love these opening momentum moves, but you gotta capture them. You gotta really make sure you had it on your screen at the open, really go for it, go for that breakout level or what have you, and then just buy that momentum scalp in that opening move when the volume's coming in, and put your stop in at the low and let the thing play out. It's a real momentum style trade. I love when breakouts play out that way, especially if you can combine a technical break with news. But you got to really be fast on the keys to be able to execute in those first couple minutes. And honestly, we used to say back in the day, when it comes to breakout trades, the best breakouts are the ones that no one gives stock. I remember back in the day on the physical trading desk, we probably took even more breakout style trades back then than we do now, or at least I did back then compared to what I do now. And I would almost view it as like a gauge on how good my trade was. If there was a beautiful breakout that occurred right off the open, or a beautiful breakout that occurred at all, it appears to be beautiful, and I yelled on the trading desk like, hey, who's got Citi or whatever name, and every single trader says they got it, I feel like my trade's probably screwed. Because if everybody was able to get it, it's probably not that good of a trade. And the best ones would be the ones that would happen so fast, especially, no offense, like the new trader, the entry-level trader. If the entry-level trader got it, I'm like, oh no, there's no way this guy's fast enough to capture this if it's any good. But the best breakout trades are always the ones that happened in like the first 3 minutes, right off the open, and I'd yell out, who's got stock in XYZ stock, and it'd be me and one guy, and then I'm like, all right, I got something good here, because no one else was able to capture it because it was so fast that if it wasn't really on your radar, you couldn't get it. And then that leaves not a disciplined trader like us, but it leaves everyone else to then chase the thing higher, which actually then helps to propel the thing up. What's that tell for you on these rippers? Are you looking at the tape, or what is the rules for that? Yeah, so there's no direct way to know, but it's layers of probability. So if you're able to combine relative strength with a technical chart breakout bull flag type setup, or just technical resistance break setup, and especially if you can combine it with news or an upgrade or something like that, that is three major layers of probability all on the side of your trade right there. And then volume confirmation is going to be another one. So if you got the volume coming in fast and furious in the beginning and being sustained, that's another layer of probability on the side of your trade. To a lesser degree, but still important, is the market itself. I say to a lesser degree because you're kind of trading an in-play trade because of the news and the technical breaks. So the market doesn't matter as much as it would otherwise, but it still always matters. So what's the tell for these rippers? It's the tell for any trade that you're wanting to look at. We're always considering the layers of probability, and the more of the layers of probability that are on the side of your trade, the higher the probability of success on that trade. Are you referencing the volume to anything? I'm referencing the volume stock trades versus itself. The first 5-minute bar and the last 5-minute bar are always difficult to read the volume because the volume is artificially elevated because of the opening and closing print. So it's a little bit tricky to read the first and last 5-minute bar and garner any information from it. I do look roughly at like the first candle versus a typical first candle, and you can just see with this city that I have open right now, and this is not a perfect guide, by the way, because again, that opening print can have a lot of variability to just how big it is to satisfy the market on open orders. But you can see here on the first 5-minute candle of city, it's almost double the first 5-minute candle from Friday. So there's some elevated volume there. Even better, and obviously you can't tell this in the first 5 minutes when you're buying the breakout, but you got something really good when you just see that like very, very, very consistently elevated volume compared to normal, and it's just staying that way for bar after bar after bar after bar. It's staying relatively high compared to what it normally looks like. I don't have a good example of that off the top of my head from today's trading session. I feel like we saw it at some point. No, maybe not with Tesla. I don't remember. There was definitely something recently that's in my brain where I was looking at the consistently high volume, but that's something that you want to see also. So yeah, so directly answer your question again, I'm just comparing the volume to itself. From David, hey David, are there specific market reversal times that you use throughout the day, and if so, can you provide them if you don't mind sharing? I don't have any specific market reversal times, but what you hear me constantly do when I'm on the radio in the beginning of the day is shift through time frames as the day moves on, and that's where you'll hear me say like, I'm trying to think of, I don't have a great example again from today. Today was actually, if anything, it's a bad example because the SPY's held in incredibly well. But usually that first 45 minutes to like anywhere from the open to 10:15 to 10:45, the 5-minute is really what I'm super focused on, is the 5-minute chart and measuring extension off that 5-minute chart. So and again, today's not a great example of it, but like a lot of the times what we're looking at when I discussed in the morning meeting today is when you have a very large gap, the market is going to have to satisfy the extension from that gap on the 5-minute. It's going to be the first thing that I'm looking for in the beginning of the day whenever there's a large gap. And that can happen through time or through price. Sometimes you can see momentum come in immediately where a market that's extended from the gap can become more extended, but that usually can't last for more than 15 minutes. Once in a while, especially if there's a news event, it can last for more than 15 minutes, but usually it doesn't last for really much more than 15 or 20 minutes otherwise. But you're going to eventually need, when you have open extension from a gap or from a gap and quick go, the market's going to have to price correct the 5-minute extension. In other words, the ADMA is going to have to catch up to price, or price is going to have to catch up to the ADMA. So whenever we have like a large gap up like today, and what I discussed in the morning meeting today was, I think that you can look for, and I specifically said I actually wasn't going to be doing this really today, but a lot of times I do. You can look for an opening price correction versus some sort of an opening pivot low, a pivot high, or sometimes if they just sell the first 5-minute bar, you could just be short versus the high of the first 5-minute bar. And all you're looking for on that is like it did it on Friday. This is a perfect example of it actually on Friday. Market gapped up right at the open. You've got extension. You can look for the opening short, but all you're looking for is a price time correction to the ADMA on the 5. And then you should be out of a large percentage of the position. Maybe you want to hold a little bit more in case the retracement becomes a reversal. But that's really all you're looking for is the market to satisfy the opening extension. Today, it did that entirely through time. So if you took the opening short, first of all, you probably got stopped out on the 945 bar, but even if you didn't, it's entirely a time correction. So you didn't get as much reward on that trade or any reward on that trade as you did like with Friday's opening gap up. And then, once the ADMA catches up, in this case through time, to this base, I would refer to this base as a bull consolidation, similar but different to a bull flag. That's when you can actually expect continuation. When the ADMA catches up to a bullish pattern is when you can expect continuation. Guess what? The ADMA caught up to the bullish pattern. Guess what? We had continuation. Come 10:30 or so, you can see we're riding the ADMA on the 5. We're riding that upper band of equilibrium on the 5-minute chart. But come 10:30 or so, that is usually when, 10:15 to 10:45, the 15-minute chart becomes more significant and more important. And what you have here at 10:30 is a little bit of extension on the 5-minute actually on this quick bounce that it had, but nothing too crazy. But you've got significant extension on the 15-minute chart. And as a quick cheat tip for people who don't have as much screen space, the 21 EMA on the 5 is usually very closely aligned with the 8 EMA on the 15. So I don't even need to click over to a 15-minute chart to know what the 15-minute chart looks like at this point. I know that the 15-minute chart has a lot of extension off of its ADMA, off of its upper band of equilibrium, because it's going to be about where the 21 EMA is, and look how far the 21 EMA is on the 5-minute versus where price is. But for fun, we can reference it. And now you can see here at 10:30, look at all the extension that you have. And this is the time of day when usually the 15-minute chart extension needs to be satisfied. So again, didn't work today because there's no such thing as 100% in trading, but I actually love like a short here at 10:30 with this amount of extension on the 15-minute chart, really using like this 5-minute maybe as more of like a signal. But you're putting this short on now, not looking for just a move to the 8 EMA. You're really putting this short on looking for a move to the 21 EMA. Again, through time or through price. Price is going to pay you more. Time will pay you less. But you can't know without a crystal ball if the market's going to satisfy its extension through time or through price. And today was, a pretty unusual circumstance where the 15-minute chart extension didn't actually get satisfied until 12:15. Usually it's much earlier than that. Usually you can, for lack of a better term, bet on 15-minute chart extension being satisfied starting, if I see that it's 10:45 and we're extending on a 5-minute chart and super extending on the 15-minute chart, I'm really looking at that point again for shorter term shorts that I can put on because my reward profile is so great at that point where I can be taking 5-minute time frame chart risk to get 15-minute time frame chart reward down to and again, the ADMA is just the upper band. Like I was saying before when we were looking at the daily chart of XLF, the space between the 8 and 21 EMA, that's your whole equilibrium zone. So you can really be looking for price corrections all the way down to that equilibrium zone. So are there specific market times where I'm looking for reversals? No. And especially the word reversal. I don't like the word reversal. The word that you should use in that case is retracement. And I would still say no, I'm not necessarily having specific times where I'm looking for retracement, but I am taking the time of day in conjunction with time frames into account when I'm trading and understanding that, wow, it's 10:45 a.m. and we're really extended on a 15-minute chart, that probably can't last. It's like a mathematical law that while a stock can become more extended, or another way to say it, more irrational, than you can remain solvent. A stock can become more extended when there's momentum. Eventually, all stocks will need to correct through time or through price to those moving averages. It's just a matter of, you can't come in and just blindly short things either, because you're seeing it's far away from a moving average, because those moving averages are going to continue to rise, especially if the stock goes sideways or the stock continues to go up. So if you're just blindly shorting something because you're thinking it's far away from a moving average, you could lose a lot of money, because by the time that price correction occurs, the ADMA could be well above where you even put the short on, because the moving average continues to move up as price continues to move up, or even as price continues to go sideways. So I hope that helps, David. From Kevin, major breakout in Roku. Yeah, I know we were looking at that Roku in the morning meeting today. Yeah, huge breakout through that 112 area. Pretty solid. Thoughts on the daily bar in TFX? TFX. I don't know if I know this stock. Teleflex. Volume is light. Gap fill from the post earnings fade. Looks like impulse waves 1, 2, 3, 4 up from the 11 6 low. Now fourth wave, bullish reversal. Sure. So I don't use Elliott wave theory at all in my trading, and my knowledge on Elliott wave theory is, I'm not going to say it's zero, but it is very limited. So I'm not going to be able to give you any feedback on your thought process on the waves there. From a charting perspective, the first thing I would tell you is this is very borderline from a volume perspective if I would even trade it. Borderline. It's not a no. As a general rule, I don't like trading stocks that trade less than 1 million shares a day, but I will. And as a general rule, I won't trade a stock that trades less than 500,000 shares in a day. This looks like the average volume on this is probably a little bit above 500,000 shares a day. Some days, escalating a little bit more, getting closer to 1 million, and on news events, obviously, it does significantly more than that. So from a volume perspective, to me, this is borderline, and if I would even trade it, but technically it's in the realm in which I would. From a charting perspective, from the way that I view charts, you've got pretty much exactly what you described. You got the earnings, I'm assuming earnings because that's what you said. I don't follow the stock. I don't know the name at all. But you have an earnings gap up here that slowly faded into gap fill support, kind of created a base off that gap fill support. And now with today's trading session, it looks like it's attempting to round back above that. So you could be buying this stock today through this like 123.50 area, which is kind of the resistance of the base, to see if it can break out of that base, round up out of that base, and then work its way back into these like low 130s. But yeah, decent looking chart, trying to break out of a base off of a support level. So from a charting perspective, it looks pretty healthy. I would not want to see this really get back below like that 123, 123.50. Yeah, so Liam saying I have to make a 2-day chart setup for quick referencing of volume in the AM. So people know, especially anybody who's newer, the way that my chart always looks is pretty much exactly like this on a 5-minute. I see all of yesterday, and then you can't really tell right now because the market's closed, but the way I look at my charts is I see all of yesterday, and I see whatever today is so far. So like I see all of yesterday, and then today is like slowly building out. If you want to see what that looks like, just look at my screen share in the VTF tomorrow morning, like when the market first opens, and you'll just see how my index 5-minute charts look, where you see all of yesterday, and then you see today building out. I need to have that reference. I can't look at a chart. It's a little bit easier now because the day is closed, but I can't look at a chart like this, especially, I can't look at a 5-minute chart of the day only especially when it's like 10:05. There's no information here. So I am always looking at my 5-minute chart, with the perspective of all through yesterday and today so far. When I'm looking at a 15-minute chart, I'm usually going back like a handful of days. Something like this. I see a handful of reference plus today. I might zoom in a little bit to get a better idea of the extension and executions on the 15-minute chart. And then I'm looking at a daily chart. I'm looking at typically all three of those time frames in conjunction with one another. I don't really pay attention to a 15-minute chart in like the first 45 minutes of the day. But so I'd say first 45 minutes of the day, I'm really only looking at a 5 in conjunction with a daily. And then the rest of the day, it's like 5:15 in daily in conjunction with one another. From Vincent, what do you do as far as scans the day before to look for stocks to trade? I don't do anything the day before. I do all my research pre-market the morning of. I prefer to do it the morning of because you just have more information. You have the updated news, you have the updated information on how the whole market's gapping, how the stock is gapping, updated earnings reports, whatever else. So I don't do anything the day before as far as research goes, or I don't do any charting research the day before. I'll do more institutional type research, institutional notes, things like that. If I get my hands on them, I'll read through that stuff. But I don't do any charting stuff the night before. I do it all the morning of. So that's that. And then as far as scans go, I don't really use any scanners. I use the virtual trading floor. We collectively as a team here, and a few people out there give a special shout out because they do a great job with it. You guys know who you are. Collectively as a team, we get just every possible piece of good information that you could ever need into the virtual trading floor pre-market. And that's what I'm using. So, hope that helps. Yep, sounds good, David. Sounds good, Kevin. I'm fine with small caps too. I'm not fine on no liquidity. And again, this is what I would call a borderline one for me. If you look at the 5-minute chart of TFX, you'll see that there's gaps on the 5-minute chart. That means that occasionally this stock will go an entire 5-minute period without any shares trading. I don't like that just from a liquidity perspective. If you get a rapid move here and you got some size, it could become very, very difficult to get in and out of positions in it. So that's what I care more about is liquidity, spreads. I don't like really, like I mentioned earlier with Goldman. Goldman's got plenty of liquidity. It trades a ton of volume, but it's such an expensive stock that the spreads are really, really wide. So it's not that I'll never trade those things, but I don't like wide spreads. I don't like expensive stocks as kind of a general rule. I don't like things that don't trade a lot of volume, and it all has to do with liquidity, the ease of getting in and out of large positions. From Ryan, what do you think about this wedge triangle in the Qs? An inside day today, I'm thinking we break up. Excited to see how this resolves. Sure. So for anybody who is in the YouTube, what he's drawn here is basically a wedge in the Qs that's very visible from the peak in October, kind of these peaks in December, this peak on like December 26th through now. So you can draw like a descending trend line here, and you can draw like an ascending trend line starting from this November pivot low through here. So you got just a tight wedge formation. So yeah, I agree with you. It's an exciting pattern. It's technically a bull wedge, so there's a higher probability of breaking up than down. And when you take into thought the other indexes that are also showing us bullishness, once again, that adds an additional layer of probability that the wedge break is up, not down. So we'll see how it plays out. Google, Amazon, Meta, Tesla, Palantir, Netflix, all inside days today. Cool. We'll look at that stuff in the morning. Over onto the YouTube. Good to see you guys back. It's been a while. From Sebastian. Today I was looking at Oracle through 200. So was I. And NVIDIA through 193. I got into both of those trades after the open, but as you probably know, both sold off. I got stopped out of them very quickly. Yeah, Oracle was a disappointment. I had Oracle on my list today. I know I tried to go off the open and I couldn't get over to it. I just had too much going on. But super disappointing to see Oracle once again fail. This thing is really, really a dog. Really a dog. And it really represents the concerns with the AI trade in so many ways. So it's important that we continue to watch that. And then yeah, NVIDIA. I went over NVIDIA for my own part of the afternoon meeting already. NVIDIA was also really disappointing today. So I like both of these charts and the work that you're doing in your preparation to look for these ideas. It just unfortunately wasn't the day for either of them. And the NVIDIA daily chart is still intact, but definitely I would call it a disappointing day to close below 190. Okay. I don't think that you were wrong on putting some exercise on it. I'm not sure necessarily A plus type trades because the Nasdaq hadn't fully confirmed it yet, but definitely I think that they were both really good setups. So, I would describe them as good losses. And by the way, for everybody, good losses are a good thing. There's such thing as a good loss. There's also such thing as a bad gain. So once again, for anybody who's a newer trader here, one of the most difficult things about being a new trader when you're first getting started is the reinforcing mechanism in your brain of losing money means you did a bad job and making money means that you did a good job. That is not how trading works in the big picture. You can have trades or even days of trades where you do everything wrong and make money, but you will not be able to make money doing that in the long run. And you will have days where you do everything right and you lose money, and that is how you make money in the long run. So one of the things that if you're a newer trader you need to work on is understanding the difference between good losses and bad losses, good gains and bad gains, because it's not as simple as what your P&L shows. From Julski, haha. No comment. From Giancarlo, thoughts on Micron. I was surprised that Micron failed as hard as it did today. I know Josh called out a short on this, so shout out to Josh. I actually thought that this was going to hold up on its day 2, but it didn't. They faded it. They faded on day 2. Day 2s are always tricky, though. That's why, as a rule, you'll hear me say pretty regularly I don't like trading day 2s, because it's like day 2, you can get continuation, you can get time correction, you could get price correction. It always kind of feels like a little bit of a coin toss. But the bottom line is that Micron, between Friday's strength and today's gap up, just got really, really extended to the upside. And it price corrected a little bit. And it's still far away from its equilibrium zone. I would say that today's candle indicates that Micron is probably set up for further correction. That correction could happen, again, through price, or it could happen through time. Micron could pull back to $300 and still be a very, very healthy, bullish-looking stock. Or it could bull flag between 315 and 305 and let those moving averages catch up, and then, of course, it would still be very bullish. So Micron looks great to me, honestly, as long as it doesn't lose 280. If Micron loses 280, you might have a little bit of a bigger problem on your hands with this chart. Japan and Germany ripped today from Cyril. Yeah, I believe it. Just continued outperformance. Obviously, 2025 was a strong year for the U.S. market, but it was an even stronger year for the rest of the world. So the United States actually underperformed in 2025. So we'll see if that continues to be the trend as we get into 2026. All right, folks, almost 5 o'clock. So if there's nothing else, I'll wrap it up for today. Back on the afternoon meetings. Good to see everybody again. If you're in the YouTube, give me the thumbs up. Have a great night, everybody. I will see you all tomorrow.